Good morning from London. I'm Anna Edwards alongside Guy Johnson and Tom Mackenzie. We're an hour away from the opening trade. Here's what you need to know. Donald Trump promises to follow through with 25% import tariffs on Canada and Mexico tomorrow. The loonie and Mexican peso fell on the president's remarks. Apple shares moved higher in after-hours trading after the company offered reassuring guidance, capping a big week for the sector, dominated by earnings and DeepSeek's AI achievements. Plus, Bloomberg has learned the ECB may stop calling its monetary policy restrictive as early as March after the central bank cut rates for the fifth straight time.
Let's check in on market setup then. European futures currently flat, but after another record yesterday. Can these records keep coming for European stocks, or will they be derailed by the tariff threat? FTSE 100 futures currently pointing to modest gains of 0.1%. The US 10-year is seeing a little bit of selling pressure on the tariff story, 454. Yields currently up 2 basis points. Euro dollar at 103. You're seeing strength on the Bloomberg dollar index, currently up around 0.2%. The countdown to the opening trade starts right now.
I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
President Trump moving the markets yesterday, talking about the tariff agenda he has long talked about. Are we about to see that becoming the reality for Mexico and Canada? The details, though, matter, and I think this is where life is about to get interesting. Will it include oil? Will there be deferrals that are part of this package as well to allow further negotiations? What about the legality of the emergency powers potentially he is about to use? There are still questions. He sounds clear, but the details matter.
I wrote down a series of questions here, exactly that, Guy, based on this news. So reiterating the 25% tariff from tomorrow on Mexico and Canada. But to your point, the key question, does it include oil? Will there be some kind of carve-out? Is there anything the Canadians and the Mexicans can do to prevent this? Because is this, even if they tackle fentanyl and the migrant flows, you know, there's still a trade surplus with the United States, which is something that we know the president doesn't like. We know that Canada is going to hit back as well. They've already told us they'll hit back against US coffee and against bourbon. So now we brace for some of the detail.
Trudeau went to Mar-a-Lago. He sent helicopters and drones along the border. It doesn't seem to have worked so far. 4 million barrels a day? 4 million barrels a day exported from the US markets to the Midwest, from Canadian markets to the Midwest of the US. Ohio, and you're seeing lawmakers there already trying to push back. This has implications as well for the macroeconomic data. Bloomberg Economics saying that the PCE gauge later today will see that consumers in the US are buying durable goods on expectations that tariffs will increase. You've been seeing a pickup over the holiday months from consumers already trying to factor this in to their purchasing habits.
Companies are already front-loading. Companies have already been importing. The oil question is, though, interesting. Is there a carve-out? Is that something that the administration recognises a significant risk and therefore excludes it? There's also a legality issue around this as well. They're going to try and use 1970s legislation, the International Emergency Powers Act. And there are already questions about whether or not that could be problematic, whether there'll be pushback from the courts. They want this to be durable, i.e. they want this to be something they can replicate with other potential tariff packages as well. If there's early pushback, that could cause problems for the administration.
We're looking at Apple, of course, as well. On some levels, reassuring, because the services part of the business did very well. They're very optimistic about the opportunities in India and the emerging markets. And you saw sales of things like the Mac performing better. The current quarter as well, the guidelines and the guidance around the current quarter coming in above the estimates. But the drop in China is pronounced.
Yeah, that's really bad. And it's certainly something that looks like it's going to be ongoing as well. This is going to continue to be a struggle. You can't use the AI package that is offered, for instance, in the United States, not here yet, on your iPhones in China. Therefore, why would you want to do that? Why would you not want to take on a more domestic package, domestic phone, and access AI that way?
Yeah, so disappointment in China. The services side, though, was an area that did please some analysts, didn't it? And some of them like the revenue that they're getting on the Mac and on the iPad. Tim Cook on the call didn't have anything to say on tariffs, nothing to add to things he'd previously said. So we'll see how that one plays out for this incredible, poster child for the globalised world, really, incredibly global business. But interesting, on the success or lack of for the AI features at Apple. They're talking, one of our opinion columnists writing about the sort of lackluster rollout of Apple's 16 phone, partly because they couldn't put all of these features everywhere, and some of them were even delayed in some of their core markets.
The rationale for Apple has been, we want to get it right. We have a premium product. We want to make sure that the Apple AI, the artificial intelligence part, actually works really well, that users really enjoy it, that there are all the safeguards around data and security, and that longer term we will benefit as a result of this gradual...
bigger.
But that is the problem.
That's the problem,
and that's what analysts are calling out.
Samsung have also got a hardware problem by the looks of things as well. That showed up in its numbers today, but that's not where the big problem really lies for them, isn't it? It is the high-end chip story that is damaging Samsung. You think about Apple and Samsung in terms of competing products in the handset market, but Samsung's real issue lies elsewhere. Yeah, the scrutiny for analysts and investors was not on the handsets, it was on the high bandwidth memory that accompanies the AI accelerators that NVIDIA makes. They finally got a sign-off on their high bandwidth memory, the most recent chip, in December, so they're now able to send that into the Chinese market with the export restriction available NVIDIA chips. So the chips that NVIDIA can send in, they accompany them into the Chinese market, but they are still months behind. SK Hynix has had this kind of chip, the HBM chip, that Samsung has now come out with for months. Samsung is still playing catch-up, essentially, with SK Hynix. And that is it. They had a sign-off on this one. They need to get the sign-off on the HBM4 next.
So plenty of things around technology, whether it's the earnings stories
to your point, it's about that gap, the innovation gap.
Absolutely.
Which is what you were highlighting around Apple.
And we will talk about the innovation gap in a different context, between OpenAI and DeepSeek and China and the US, and we'll come to that conversation later in the programme, won't we, Tom? But we need to talk about central banks.
But there's a line you can draw between tariffs, potentially inflationary, AI potentially deflationary, though initially inflationary, but further down the road to becoming deflationary. And then you get to the central bank story. What happens with inflation? All of this comes together and is so important at the moment. It's so difficult to determine where inflation is tracking next. We're going to get PCE data out of the United States a little bit later on. Lagarde yesterday, in so many ways, didn't do anything. Cut as anticipated. Basically signalled that she's data dependent, a bit like the Fed. The Bloomberg story that comes out afterwards, though, as ever, is the one that in some ways really moves the market, and basically says that they are going to withdraw the restrictive line from probably March. And I think that's really important because it basically tells you they're getting near to neutral. This is where it gets really difficult. Probably aren't in restrictive territory anymore. But the question still remains, do you need to go below restrictive, i.e. do you need to become accommodative once again in order to try and stimulate the European economy?
And you're right to focus on that story. And it seems as if whatever it means in terms of how many cuts are to follow, when they remove that language, it does suggest you are that bit closer to a pause. And that seems to be the way that the market is perhaps interpreting this story. And we'll watch at 7:30 UK time in 20 minutes or so to see what reaction we get in the European bond market. So that'll be an interesting one to watch. And interesting that this is the language they're using as the Fed's, after the Fed has paused, and you wonder how focused they are on that euro-dollar gap.
But in terms of the euro-dollar gap, what's driving it? In theory, it should be the tariff story. You get a stronger dollar, and that's what we've seen. If you get tariffs, that is strong dollar.
And China and the Canada-Mexico news did weigh on the euro yesterday. So,
and you've seen it weigh on the yen, you've seen it weigh on China, you've seen it weigh on all kinds of other factors. So the central bank's taking a back seat when it comes to the FX trade. Let's talk about what we've got coming up for you. We're going to figure this all out throughout the programme. Mary-Therese Barton, CIO for Fixed Income at Pictet Asset Management, is going to be joining us shortly. Kei Jin, author of the new China Playbook, is going to be joining us a little bit later on. How did DeepSeek catch everybody by surprise? We'll try and answer that question. And Michael Falcon, Tidian Capital CIO, Tidian Capital CIO, is going to be joining us a little bit later on. There's much to discuss in these markets.
Here's what else we'll be thinking about across the day calendar, or the calendar for the day. 9 a.m. UK time, ECB inflation expectations, to the point we're discussing around the ECB and how they get to the neutral rate and to what extent inflation and deflation plays a role in that. 1 p.m. UK time, the carve-out for Germany in terms of consumer prices, so we'll break that number for you. That's not until 1 p.m. UK time. 1:30 p.m, though, it's the big one. Arguably, it's the US PCE inflation gauge, the favoured metric, of course, of the Fed, expected to come in around 2.6%, so, of course, still above that 2% target. At 1:30 p.m, we're going to get maybe some reaction to that number from the Fed's Bowman. She will be speaking, Michelle Bowman, her reaction as well, anything she says on the future path, of course, for rates, given the hold and what we heard from Jay Powell earlier this week. And at 2:30 p.m. UK time, we're going to hear from from a policymaker at the ECB, Mr. Villeroy, will be talking, and we'll be bringing that for you. And later on the earnings front, it's the energy giants of Chevron and Exxon, with those numbers crossing.
That's what's coming up. Let's talk about what's happening right now and what has been happening over the last few hours. I want to turn our attention back to what's been going on in Washington. US investigators have found the black box flight recorders from the American Airlines regional jet that crashed in Washington Wednesday night after a mid-air collision with the US Army helicopter. 67 people were killed in one of the deadliest US air disasters in decades. There were no survivors. President Trump, meanwhile, has signed an executive action to review DEI programs at the Federal Aviation Administration. He blames these for the accident, despite also saying he doesn't know the true cause of the crash. An FAA investigation is underway. Bloomberg has learned that OpenAI is in talk to raise as much as $40 billion in a funding round led by SoftBank. The ChatGPT maker is in discussions to raise funds at a post-money valuation of $300 billion, assuming AI raises the full amount. It was valued, remember, at $157 billion back in October, just in October. Bloomberg has earlier reported that SoftBank was considering investing $15 to $20 billion into OpenAI, a deal that would potentially make the Japanese company its biggest backer. And the German parliament is set to vote on a hardline immigration bill, which has caused a stir, not just because of its tougher stance, but because the CDU leader, Friedrich Merz, the favourite to become the next German chancellor, is relying on support from the far right to get it through. He has faced a fierce backlash, including accusations that he has breached the firewall aimed at keeping the far-right AfD from power. But on Wednesday, in a controversial Bundestag vote, Merz relied on the AfD to secure approval for a non-binding motion urging the current government to take action on migration. So there's a number of different strands to this story, one of which is obviously what is happening in German politics and Merz kind of tacking to the right in order to secure victory, and that takes him into AfD territory. I think there's an immigration kind of inflation angle to this as well, which I think we're seeing showing up in the United States, concerns around what is happening there. Does that same story now show up in Europe? Germany has pulled in a lot of labour over the last few years. If that starts to get restricted, does that feed through into a tighter labour market? I don't know. At the moment, that's not an issue because of the different economic kind of positions.
Yes.
But worth bearing in mind.
Yes, the conversation likely to get heated in Germany today. Questions will be asked about the firewall and the way that the parties, the more mainstream parties, are either deliberately or, in Merz's view, not at all collaborating with the AfD on this. This is likely to be killed in the Bundesrat, the upper house anyway. Yeah. So it's not as if this goes into law, and it is ahead of an election where all things change. But it is a tactic that we've seen played out in other geographies.
Yeah, and it's the complexities of the domestic politics of Germany, but how to contend with far-right groups as well, because the CDU is saying this is a way to neuter the support for the AfD. Yeah. Merkel coming out, interestingly, with that letter, of course, and saying this is the wrong approach from the CDU. We should be holding the line on that firewall. But it's incredibly complicated in terms of how you deal with that right-wing threat from the perspective of the CDU.
That's in Germany.
Yes.
It's a problem in France. It's a problem in the Netherlands. It's increasingly becoming a problem, therefore, for Brussels. How long can the, quote, firewall last when the right becomes more and more popular and takes more and more votes?
What percentage of support does the National Rally in France have to get, the AfD in Germany have to get, before people start to ask questions about whether the cordon sanitaire or the firewall endure? Interesting you mentioned the United States, though, and the immigration clampdown that we're seeing there from President Trump, certainly on some fronts. Interesting note out from Standard Chartered this morning. Updated estimates show that undocumented migrants likely contributed two-thirds of the 2024 non-farm payrolls growth.
So what do you do?
That is a huge,
I read
huge
that as well.
number.
It's fascinating. So what do you do now? Do you focus not on the headline number? Do you focus on the wage number? I.e., if the number of people contributing to the headline number go down, presumably you've got fewer people, therefore, in the workforce. Therefore, does Labour have a greater say and, therefore, is able to demand higher wages?
It takes us back to that inflation theme, one we will return to through the programme. Coming up on this programme, Novartis posts a beat and says profits will rise this year despite copycat drugs expanding. We will check on the stock at the start of trade, of course, coming in around 45 minutes' time. Plus, we'll talk China and the impact DeepSeek's rise could have on the tech in the country and globally. Up next, markets are moving as Donald Trump doubles down on tariff commitments. We'll discuss that next with a guest. If you have any questions, if you want to get involved in any of these conversations, IB plus BBTV Go. That is the function to use on your Bloomberg terminal. This is Bloomberg.
18 minutes past the hour. Welcome back to the opening trade. Let's talk tariffs and figure out what the impact is going to be. So Donald Trump indicating that tariffs on China, Canada and Mexico are due to come in effect on Saturday, potentially 25% for Canada and Mexico. We've seen currencies on the move as a result of that. You need to take a look at this on a two-day basis. The one-day chart doesn't really capture it. This came out kind of late last night. So we're going to show you the one-week chart just to give you an idea of what is happening here, or the one-week numbers to give you an idea of what is happening here. Let's talk about the impact of this. Mary-Therese Barton, CIO for fixed income at Pictet Asset Management, sitting around the table with us this morning. Good morning. Good morning. What does the fixed income market do with tariffs? Is it inflationary or is it a drag on growth? Which way should I look at this?
Well, there's a huge amount of uncertainty. I think the consensus has been it's going to be more inflationary. And thinking about it in the context of the US and thinking about the US exceptionalism narrative. But I think when you turn to the rest of the world, I think there is a concern about what it means, in particular for growth. And we see that in many of the central bank decisions and those coming up in emerging markets. There's a lot more caution in terms of what they can do in terms of policy.
So it's inflationary, and so treasuries, where do we see them heading? I mean, we saw a Fed this week that was in no hurry to cut. But is that where the conversation should be? Should we be actually asking when is the next hike? If, so many guests come on this set and tell us a lot of these policies add up to inflation.
Look, it's a fair question, but I think where a lot of the market's looking right now, 4.5% in the 10-year seems about fair value. So what are we thinking? 50 basis points of cuts for the rest of the year. But there's also been analysis showing actually the impact on growth could be greater. Hence, I really want to emphasise this sense of uncertainty that the markets are feeling and a lack of conviction. But I think where the tariff premium has been taken out recently, just over the last week, has actually been in the FX market, and would expect that to start to come back.
So on the FX, Mary-Therese, on the FX market then, how safe is the dollar higher trade at this point? I mean, how much priced in? We're seeing another move higher today. How much on the tariff side is priced in to the greenback at this point?
Well, it's very much a consensus trade. I think people went into the year on this US exceptionalism, the analysis on the tariffs. It is a dollar strength story, and I think the positioning is there. And probably for choice, we still have a long dollar bias across our portfolios. But again, this conviction is lower right now. So if anything, I think post the weekend, there's a bias among our teams actually to be taking some profit on a long dollar view and actually still playing some relative value views across different emerging markets, where we are actually long dollars against a certain basket, but looking to actually be long some EM currencies in places. So it's not a clear-cut case for us.
OK, so a lack of conviction and a lack of clarity on a number of fronts. Mary-Therese, stay with us. We will return to you in a moment. We'll just get an update on all things that are happening over at the ECB, turning our attention to the European Central Bank, which may stop describing its monetary policy stance, we understand, as restrictive at its next decision in March. That is according to people familiar with the Governing Council's debate, speaking to Bloomberg. For more on this Bloomberg scoop, Lizzie Burden joins us now from Frankfurt. Lizzie, how significant then could this be in the context of all we heard yesterday from Lagarde & Co?
Well, essentially, Anna, it sends the signal that the end is nigh for rate cuts. At the moment, the ECB describes its policy as restrictive, and yesterday at the meeting, they could have sent a hawkish signal that rates are approaching neutral, this level where rates are neither constraining the economy nor stimulating it, but they didn't, and that's why you saw barely any movement in the market off the back. All Lagarde said was that they're going to publish a report on February the 7th about where neutral lies, and elsewhere she was predictably tight-lipped. Take a listen.
We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path.
But then, just to give the market a little excitement, our team here in Frankfurt had the scoop that the ECB is going to discuss whether to change the language around restrictiveness at the March meeting, and that's why you saw the euro picking up a little bit off the back of the news. The caveat is neutral is not terminal, and because of the weakness that we've seen in the euro economy, even in that GDP print yesterday, it could be that they need to cut rates a little more after they've gone past neutral.
OK, Lizzie, thank you very much. Bloomberg's Lizzie Burden with an update on the ECB. So neutral is not terminal, she says. Let's get back to Mary-Therese, who's still with us from Pictet. How much closer are we to a pause from the ECB, do you think, in the context of what we've heard from Lagarde, our reporting, and what the Fed is doing, importantly?
Look, for us, I think the takeaway is that it's uncommittal. Again, it's going back to this sense of uncertainty. Our view is another 75 basis points of cuts still to come. We think we're going to see sequential cuts going into June as well. But again, it's focusing on this uncertainty in terms of the impact on the tariffs, the impact on inflation and the impact on growth. But what's clear for us is the Fed was certainly more hawkish. We saw a more dovish tilt from the ECB. And again, that is really bedding down this kind of interest rate differential narrative in the US exceptionalism and stronger dollar narrative.
In terms of what happens next, though, for the ECB, how much more difficult does it become at this point to make the calls? The closer you get to neutral, presumably the more difficult it is to determine kind of where you should stop. And we don't know where neutral is to start with, but let's assume that it's kind of circa 2. Is that where they're going to end up finishing up? Like that there is a risk to going below it, and that risk increases around this kind of point.
Absolutely, and I think central bankers are very keen to emphasise the difficulty of talking about where that neutral rate is. And again, it's back to that same narrative with so many unknowns in the market at the moment. I think that just really compounds the fact that this is an art form. It's certainly not a science for the central bankers.
We have the Bank of England next week. We were speaking to Tatiana Groh-Castro from Mizuho on the last hour. She says there are opportunities in gilts. There's the carry that you can get and the expectation that the BOE does more than maybe traders are expecting. Does that align with your view? Would you push back on that? How are you thinking about UK gilts?
I think it does align. We would be anticipating a 25 basis point cut. I think overall in fixed income, again, this going back to this concept of value, you know, we're back across the fixed income market at looking at the curves have disinverted. You're back to getting roll down by extending duration. And in addition to that, you know, there's a sense of value in 10-year around 4.5%. And I think at some areas of the gilt curve, yes, we're seeing that as well. But fiscal does matter. And I think that is what we've been reminded of this year.
Yeah, fiscal does matter. The 10-year, as you say, here in the UK, currently yielding 4.56. We'll see when pricing, of course, starts at 8 a.m. UK time. At the front end, 4.25, but maybe an opportunity there towards the back end of the curve. Thank you very much indeed. Mary-Therese Barton, CIO for fixed income at Pictet Assets Management.
Bank of England next week.
Yep.
It's going to be really interesting to see what it does in terms of the message that it's going to communicate. The Bank of England probably has one of the most difficult jobs, you could argue, in global central banking right now, given the inflationary story that exists within the UK. It doesn't just... Clearly there's a growth issue, and the Chancellor is trying to address that, which also makes the Bank of England's job more difficult. But there's also this kind of ongoing wage story.
5% on wages? Is that the latest numbers? Around 5%, right?
But what if there's a more muted tariff risk? I mean, is that... To the extent that that is any central bank's problem, you know, maybe that makes things slightly easier at the margin, but President Trump is unpredictable, so who knows?
Absolutely. Well, we're about to maybe see other central banks reacting. It'll be interesting to see how the Canadians react. What does the central bank do there? I think will be fascinating if we do see the heavy hand of tariffs coming through this weekend, 25% across the board. Yeah,
the Canadian central bank potentially forced to make a more dovish set of policy decisions in light of that. Coming up, we're going to switch focus, though, to technology with a focus on DeepSeek and AI innovation. Stay with us. This is Bloomberg.
Welcome back to the programme. 30 minutes from the opening trade here in Europe. Let's look at the futures picture. And European equity market futures look like this. Slight positivity factored in. US futures pointing a little higher. NASDAQ futures up 0.8%. The Apple effect perhaps in that. More on that in just a moment. In terms of the bond markets then, worth lingering here for just a second because we have been covering that ECB story, which you might think would lead to slightly higher yields if we are slightly closer to a pause than we previously thought at the ECB. And we are seeing that just at the margin. We're up 2 basis points or so on French and German 10-year debt this morning.
Let's keep an eye on chip stocks this morning.
Yeah.
We've had a lot of news on that. The Apple story, as you say, is going to be really important. What I thought was interesting, Apple really leaning on services. It's not relying on the iPhone in the way that it once did. The iPhone used to be the kind of the key driver of pretty much everything. But you look at these numbers, iPhone kind of flats.
Yeah.
Services.
If you're an Apple bull, you can make the case that this is a more resilient company, a more diversified company with that exposure to India, to EM.
Yeah.
They talk that up. And the services part with apps and music doing very well. The critics would say the iPhone is still the key revenue driver and China is still a key market. And you saw an 11% drop there. There's competitive threat. The Chinese handset makers are very much in line with what
and you can't get the
offer.
AI product.
You can't get the AI product, and that is part of the problem. They're trying to align and partner with an AI business, whether it's Baidu or Tencent or someone else in the Chinese market. They've yet to be able to do that, so you do not have the AI functionality on the iPhone 16. So we're watching Apple. Nonetheless, the current quarter, the guidance was higher than many analysts expected, so that's why you saw the move higher in Apple. Talking, though, of AI, this has been, of course, a massive week in terms of DeepSeek, the model that came out of Hangzhou in China, and to what extent that's changed our narrative around artificial intelligence and technology. Bloomberg Originals has been taking a closer look at DeepSeek, asking how the Chinese startup seemingly upended American AI supremacy. Here's a preview.
January 27th, 2025 may go down in history as DeepSeek Day.
DeepSeek shaking up global tech.
NVIDIA losing nearly $600 billion in market cap today alone.
A handful of other US chip stocks, many trading at 30 times earnings or more, plummeted as well. They dragged down the S&P 500 and the Nasdaq 100.
The entire stock market has been really hinging on this AI supply chain. And what DeepSeek threw into question is whether or not that supply chain really needs to be built out as much as the companies have projected.
DeepSeek makes an app similar to ChatGPT or Claude. It'll write code, answer questions, or script an empathetic breakup text.
It quickly surged to the top of the App Store and it surpassed OpenAI's ChatGPT.
And what's extraordinary is its apparent quality and low cost. And, of course, its seeming appearance out of nowhere.
DeepSeek revealed it was able to build this model and train it at just a fraction of the cost.
In fact, it ranks among the top performers on a UC Berkeley-affiliated leaderboard called Chatbot Arena. But it's also open source. Developers can inspect the code, modify it, and run it on their own servers, even for commercial use.
The release of DeepSeek AI from a Chinese company should be a wake-up call.
Washington, for a number of years now, has been restricting China's access to cutting-edge chips, which they thought would hold it back significantly in the AI sector.
DeepSeek's focus on efficiency rather than funding meant it could engineer itself into a competitive position, even if it was standing on the shoulders of giants.
There are a lot of people now in Silicon Valley trying to decipher how exactly DeepSeek was able to build this model, whether it used technology from other companies, and whether it used more chips than it's let on.
I don't think there's a clear answer to that yet, but I do think they have shown, in the research that DeepSeek has published, that they have been able to, come up with their own innovations here, and they have been able to really be efficient with the technology that they do have.
This is a bit of a wake-up call for the AI industry.
And subscribers can watch that report in full on the terminal and our website, Bloomberg.com. Now, it is one of the big questions, of course, of the week. How did markets, especially those in the West, not see DeepSeek and the kind of innovations that we saw out of Hangzhou in China coming, given the depth of expertise in China, the number of engineers and the data that is available? Joining us now is Ke Jin, Associate Professor at the London School of Economics and author of the New China Playbook. Ke, happy Lunar New Year as well. Let's start with that. Did we have a blind spot? Did the West have a blind spot when it comes to the innovation coming out of China on artificial intelligence?
Well, this has taken the world by surprise, but it's not really taken China by surprise. Small and big innovations are happening all the time. And in fact, I would say it's actually because of the Biden technology export controls and so forth that have accelerated not only their urge and even, the whole of a nation program, mobilizing the whole country, but really redirecting profits back to Chinese companies to do all this innovation.
The H100 or the H800 is the type of NVIDIA chip that DeepSeek says it's been using. That is now banned from the Chinese markets. They're now able to access the H20, and there are now reports that the US administration are looking at further restrictions. US and European executives have aligned with that view, that if you restrict the Chinese, they're going to develop and innovate. At what point is there a crunch? Is there a squeeze? Is this about innovation, or is it about very sophisticated supply chains in China and being able to source from second and third party countries?
But even in terms of the chips, Chinese companies are redesigning chips to circumvent these restrictions. You're actually forcing them to leapfrog rather than go on the same route. So Chinese are not talking about let's try to catch up and take on the curve, but let's do a whole parallel system. So you're really encouraging them to leapfrog and invent new things, and that's what we're seeing.
Can I ask you, good morning, can I ask you the obvious question, which is whether we take at face value the achievements that DeepSeek said it's made based on some of the other reports that suggest perhaps it was acting as a child model based on the parent model being OpenAI. I mean, there are going to be investigations and lots of people dedicating a lot of time to trying to work out just whether it has really achieved what it says it has for the low cost that it says it did.
I'm sure that some of these results, there's an overhype about this, but what it really points to is that this is a progress for other AI companies in China. And in terms of what kind of chips they need, how much compute power, but you can see that it's already pretty close, right? The gap is much smaller than what we thought.
Yeah. I mean, it's a useful geopolitical argument to say the Biden administration kind of shot itself in the foot by imposing these restrictions, and look what China did then. But China also puts restrictions on its own activity in the sense of banning outside influence. So the likes of Google and OpenAI, very difficult to get access to those, I understand, in China. So, the Chinese have also been putting up these walls that maybe have arguably driven better innovation in China.
Yes, and Chinese understand that. But also, what is more important next? A lot of these AI companies are saying we're reaching peak data. We need more training data. And that's what actually China has as well.
How do we not get caught out again? It seems that we're in a situation where Western social media, Chinese social media, interacts very little now. Yeah. There are fewer and fewer reporters from the West in China reporting on what is happening. There's obviously a language gap. Now, some people can resolve that, other people can't. It seems like there's an information gap that was highlighted this week between what Western investors are seeing and expecting and what is actually in reality going on. How do we fix that?
While that is true, recently 4 out of the 5 of the most downloaded apps in the U.S. are Chinese.
Yep.
And now you add DeepSeek. So what we thought Chinese could do before, like the manufacturing, the stuff, they're moving into the territory where they're actually globally competitive and even appealing for American consumers, even some of the short videos and forums. So Chinese are eventually going to make their luxury goods, the auto parts, and all that. So it is a little bit concerning.
But how do we in real time understand what's going on? Because that's what we're missing right now.
Yeah, well, AI, ChatGPT and DeepSeek, they're the language gap there. The information gap could potentially close.
With more, but what do we need to be paying attention to?
Domestic Chinese sources, domestic in Chinese language. I've seen that gap massively, right? You read the domestic source about the economy, and it's a completely different perspective.
Okay.
I think that these kind of new AI tools can help you go into the domestic, kind of news.
Yeah, well, on the social media app, it's interesting because from TikTok and people are moving to Xiaohongshu or Little Red Book, right, yeah. So as a reminder. So they're migrating from one Chinese app to another, which shows to what extent China's kind of penetrated that space. How do you think Beijing is looking at the scrutiny on DeepSeek now? Do you think they're comfortable with the spotlight that's on that company, with the spotlight that's on their AI innovation?
They're not focused on one particular company. And obviously AI regulation is very, very high on their list. They're looking at the whole system, the cutting-edge technology. It's across the board. They're pouring massive resources into it. And by the way, that's going to displace real estate as a major driver of growth in the coming years.
Innovation, because real estate accounts for, 60% of GDP on some, sorry, 20% of GDP on some metrics, and then you expand it out to services around property.
Broadly defined, but and narrowly defined, it will be overtaken by high tech and these EVs and solar panels in the next 5 years.
What am I missing now? What am I? Tell me what I'm missing that is happening right now. You talk about the fact that the perception of the economy is different.
Yeah.
How is the perception of the economy different?
Well, here we talk about peak China, demographics, aging, as if China's done for. That's not the real issues in China. Real issues is real estate embodies a dual shadow financial sector, shadow fiscal system, and that has collapsed. Local governments are strapped of cash. Why are they not putting out a huge stimulus? Why? Why do we think here? Well, in China, it says it's because they don't know how to stimulate growth without reigniting a debt explosion. Makes sense, right?
But then should we... So, I mean, but something that you're saying is not convincing global markets, and maybe that's because of the gaps in knowledge that you describe. But November saw the biggest outflow on record in financial markets out of Chinese assets. So that's domestic money going abroad. That's international investors taking their money out of China. They're not convinced by the model that you describe or the opportunities that you describe.
There is a massive confidence issue. And that is very hard to fix. Remember that 10 years ago, China was described as too easy heated and too difficult to cool. And now it's the opposite. But the reason why they have not put out the stimulus, those are domestic specific reasons.
Okay, you wanted to take us back to the tech theme. I mean, I saw DeepSeek described this week as China and America's Sputnik moment, in reference to the Russian satellite that went up in the 1950s. The problem for China with that comparison is that Russia didn't go on to dominate the space race.
Right.
What are your expectations for how this battle between the US and China plays out? Or is that the wrong way to think about it?
Well, Russia, Soviet Union was focused on military technology. They didn't really broaden it back to civilian base. China has market, China has applications, China has finance, has learning, and China does very well in applications, but it's actually going into the cutting-edge technology. I'd say that breakthroughs will be American-dominated. Chinese are not ready to make breakthroughs. But any kind of reverse engineering, applications, derivatives, China's still
engineering.
Very, very, very important, yeah.
Are the Chinese worried about tariffs?
Not interested. Not interested in engaging in any kind of trade war. There will be a lot of posturing.
Why not? Okay, so if tariffs come, they don't respond.
They're going to respond, but it would be more for public consumption.
Domestic consumption.
Yeah, because China's economy is in a much weaker position than a few years ago during the first Trump trade war. They're going to use domestic fiscal tools to offset some of the tariffs rather than, weaken their
How
currency.
confident are they that the rest of the world can absorb that surplus of goods? You talk about electric vehicle manufacturing, for example. How confident or lacking in confidence are they that the rest of the world, whether it's Asia or Europe, can absorb that surplus?
This is a big problem. There's going to be a lot of excess capacity. Even if domestic demand rises, it's not enough to absorb that. That is the key problem of the model. But Chinese manufacturing anchors global manufacturing prices. So whether you trade or not, indirectly or directly with China, you are linked to Chinese manufacturing price. So if the Chinese economy actually recovers even more, then we're definitely going to get more inflation.
Do you see a recovery this year?
Modest rebound.
Modest rebound.
So what does modest mean? Like 5%?
I don't want it.
Plus or minus 5%?
Probably minus 5%, but it's not really that matters anymore.
A little below 5% on growth.
But and no big stimulus in March. Investors keep looking ahead to the next opportunity to stimulate.
It's all on the table.
Right.
We're in for a surprise, I think.
In for a surprise.
Okay, no, we can't leave it on that. Sorry, we're in for a surprise. What kind of a surprise are we looking at? And when does it come?
Well, it's hard to time it, but I think the government is ready to come out with a big splash of stimulus, potentially even the Hong Kong stock market, to restore some of the confidence.
And something for consumers as well, because that seems to have been missing.
It's shifting from supply-based subsidies back to demand side, so much more for consumers.
We're ending with the headlines at the end there.
Exactly.
I'll come back in a couple of months.
Well, I was about to say, you're definitely coming back. Kei Jin, Associate Professor at the London School of Economics and author of the new China Playbook. It's so fascinating to put this in the context of where Europe sits right now, because in some ways Europe may see a loss of the extra sort of capacity that would have been given potentially to the United States coming in. Is that a deflationary factor that we need to think? Well, we're about to see French CPI dropping. There's a lot of domestic factors in France that are worth paying attention to.
We've seen those enormous ships that the Chinese have built to carry the cars around the world. And
Anna's obsessed with these ships,
I am
by the
obsessed
way.
with these ships. I just think they're incredible, the size of them. And, they'll be floating around looking for a port. Maybe they'll find
This is BYD, isn't it, with their own infrastructure? I mean, you love your infrastructure piece. But there's as Kei Jin was talking about, there's the inflation or disinflation impact as a a result of the manufacturing out of China, of course, the electric vehicle impulse. Interestingly, I mean, Eugene, Professor, of course, is very well tapped into what is being thought about in Beijing. If that is right, around a splash of support coming through for the Chinese economy later this year, I mean, you look at the luxury space in Europe, a lift there. You look at German automakers as well.
I feel like I've climbed that excitement curve in
a
the
few
past.
times.
Once or twice.
Yeah. So let's see. I'll refer us back to September. French CPI.
Dropping on the screens right now, the headline number, EU harmonised month-on-month, comes through at negative 0.2. The prior number was 0.2. The survey was negative 0.1. So this is a slightly bigger drop that was anticipated. The year-on-year number at 1.8, sub 2%. So it looks like, again, soft data coming out of France. Now, there's a domestic reason for that. There's a global reason for that. The euro had moved higher on the back of our reporting surrounding the ECB. Not much reaction at this point to a slightly softer French CPI print that was anticipated.
Push higher in bond yields, moderated a little.
OK.
You know, over the last 15 minutes. But, yeah, not...
But it's interesting. Is tariffs the driver today? Does that basically supersede everything when it comes to the FX story rather than the data or the ECB?
We'll certainly be looking for the European stock impact of that, won't we? You know, are we going to see Spanish banks affected by what's going on with Mexico? Are we going to see car companies affected by what's going on in Mexico and in Canada? So lots to discuss. Coming up on the programme, we will get to the tariff story once again. We'll look at those stocks exposed to President Trump's latest tariff threats, including Spanish banks and European automakers. That is next. This is Bloomberg. Welcome back to the programme. This is the opening trade. It is 7:49 here in London, so 10 minutes or so until the start of European trading. Let's get an update on what a host of assets are doing, in particular in relation to the tariff story this morning. Ven Ram joins us, cross-asset strategist for Bloomberg Markets Live. Ven, really good to have you with us. So we saw dollar strength, we saw weakness in the Canadian dollar, weakness in the Mexican peso, and weakness in other currencies, actually, against the US dollar as a result of Trump's resolve to impose these tariffs. What have we learned so far about the kind of FX reaction function from all of this?
I think that the FX reaction function has got a lot more to go, Anna. We don't know yet whether Trump will follow through on his threat of 25% tariff. But if he does, it'll pummel the Canadian economy and the loonie. There's no question about it. Back in 2019, when Trump was in office, the Bank of Canada modeled a scenario of the US slapping a tariff of identical magnitude on imports. And what that study found was that GDP would decline 6%, while the Canadian dollar would slump by a humongous 25%. But if you look at what the FX markets are doing, FX traders reckon that the loonie may tumble just about 6% this year. That's based on the volatility pricing, one-year volatility pricing. So if Trump follows through on his threat, the markets may well be underpricing the risk of the loonie. Of course, the markets seem to be saying that, look, Trump is not going to follow through on his threat entirely. There's perhaps some room for negotiations. If you look at the Mexican peso, those traders seem to be better prepared for the prospect of tariffs, with volatility priced for a decline of as much as 20% in the peso. Now, both these economies are 60% exposed to have 60% of their trade going to the US. So I think both those economies will recoil if Trump follows through on his threat. And I think that there's much more of that FX weakness that's going to come into the loonie and the Mexican peso with the US dollar on the other side, absorbing that strength.
The yen's down a little bit this morning against the dollar. Is that because of the tariff story, or is that because Governor Ueda sounds a little bit dovish? And is that the right read, that he does sound a little bit dovish?
I think that, you know, the message that we are getting from Ueda consistently is that, look, he's willing to go further on rates. And the best thing that can be said for the yen is that it's not going to test the lows in the cycle. If you look at what they did last year, Guy, they just went 35 basis points. And the markets are thinking maybe we'll get another 25 basis points this year if you're lucky. And that is not going to cure the real rate plight that the yen is in. What is the problem facing the yen? The yen has a deeply negative real interest rate, and when you juxtapose that against the deeply positive real rates in the US, that exposes the vulnerability and the fault lines of the yen, and that is why the yen is on the back foot. So this idea where the Bank of Japan is going to go at a glacial pace is not going to remedy the yen, and it's going to stay defensive in the months to come.
Yeah, 154.74 in the yen right now, down 0.3% in the session. Bloomberg Analyze Venran breaking down the market reaction within the FX space, of course, to the tariff risk, and then with a lens on the BOJ. Ven, thank you. Remember, you can get up-to-date analysis and insight from Ven and the rest of the team. Just go to M Live Go on your terminal. Let's get your stocks to watch now with Joe Easton from our equities team. Joe.
Morning, Tom. So I'm really interested to see what happens to companies exposed to Mexico today, particularly the Spanish lenders. Probably the best place to start. BBVA has around 40% revenue exposure to Mexico. It is its biggest market, even bigger than Spain. Santander also has around 10% revenue exposure to Mexico. Going to be key for the market open on those stocks. And then also we've got automakers, Volkswagen and Stellantis. These companies make vehicles in Mexico and import them over the US border. So they're right in the crosshairs there. And also, of course, there's the beer makers, AB InBev and Heineken. AB InBev has the Modelo brands. It did offload some of the rights to that, but it is still one of their key brands. So I'm keeping an eye on all of those companies today. Then in terms of chips, difficult one to kind of read in terms of the read across. There was positive updates from the US. We had both Apple and Intel giving really strong reports in terms of their sales and also their guidance as well. And decent moves higher in those stocks in the post-market in the US last night. But then in Asia, it's been weaker, with Samsung actually looking pretty negative in terms of some of their chip outlook in terms of that one. SK Hynix, of course, catching up following the plunge on the DeepSeek news. In terms of Novartis over in healthcare, this one potentially going to be higher. They are predicting double-digit sales growth for the company. That could continue the rise that we've seen off the lows earlier in the year. And then on your analyst ratings, do note that BBVA has an upgrade. Could potentially take the sting out of that one.
That's really interesting, isn't it, in the context of the Mexican tariffs as well. Joe, thank you. We'll be back with Joe shortly to see the impact of the tariff story and the ECB latest news flow on markets. This is Bloomberg.
We've made it to Friday. We've still got to deal with Friday. A couple of minutes to go until the opening trade here in Europe. Let's talk about where we have been and maybe where we're going. European equities rallying into the close yesterday. We've had a really strong start to the year. Does that continue? Choppy end to the session over in the United States and a lot of action after the end of trading as well. Now, we factored in, obviously, what's happening with the Fed. We saw a few earnings yesterday, but actually Apple and the tariff story not yet fully on this chart here. So we need to factor that into our thinking this morning. How does the market navigate that? How much risk do you want to take into this weekend as well, given the fact that Trump is talking about the tariff story over the weekend into Monday? I think it's going to be a fascinating trade to watch. Tom.
Futures so far looking through those tariff risks when you look at European futures after, as you say, the record gains that came through again for European stocks yesterday. European futures pointing higher by 0.3%. Part of that seems to be down to pricing a more dovish ECB, softer inflation data out of France. Speaking of which, as you can see, the CAC is currently looking to add 23 points, up 0.3%. Here in the UK, the FTSE 100 looking to gain around 13 points, up just over 0.1%. Guy.
I'll pick up, Tom, and talk about some of the stocks that are in focus this morning. Novartis sees profit gaining despite copycats for top drugs. So they've come out with some new guidance, core operating profit to grow by a high single to low double-digit percentage this year. So we'll see whether that moves the stocks this morning. Orsted also in focus, the CEO stepping down after failing to turn around the wind farm business. This really interesting in the context of another Trump presidency, of course. This is a business that had to take a number of write-downs on offshore wind projects. And tariff-exposed stocks, of course, we're focused on those, whether that's the auto sector or the banking sector. Both of those spring to mind initially, Guy.
Yeah, I think it'd be interesting to see what the oil sector does as well. We don't know yet whether or not they're going to be included. Let's talk about the markets. Let's talk about the opening trade. Here we go. Here's the numbers for you. FTSE 100 up by 0.2%. 1/10 of 1%. I maybe should be rounding up. There we go. 0.2%. That's where we are at the moment. We'll see what the 600 does in just a second. We'll see how some of the single stock stories work their way through the market as well. Novartis is going to be an interesting story. We'll see how the SMI opens on the back of that story there as well. The IBEX is up by 0.2%. The CAC 40, lots to factor into the CAC this morning. We've also had inflation data that we need to fold into the story there. Germany up by 0.2%. Germany's opened quite quickly. Tells me there's no news in the German market this morning. We still wait for the Swiss market. Tom, Anna, what are we seeing below the surface?
Yeah, across the sectors, top of the list right now is technology gaining 0.9%. What a massive week, as we've been discussing, for the tech sector, given everything that's come out in terms of DeepSeek, the earnings coming through. Most recently, of course, for Apple. So Apple could be part of the factor that's leading to that sector on the upside. Their guidance for the current quarter better than the estimates. Healthcare also up by 0.8%. Energy gaining, stronger oil. That ties back to the tariff risk question, of course, as well. Energy as a sector up 0.4%. On the downside, real estate off by 0.3%. Telecoms also lower by around 0.3%.
Yes, Novartis, if you mentioned the healthcare sector is doing well, and Novartis is one of the drivers of that. So the sector as a whole up by 0.9%. Novartis up by 2.2% after they put out this new guidance to the market. They're facing a number of patent expiries for 3 of their key drugs, but they have also come out with some new guidance that demonstrates some positivity despite those copycats.
Absolutely. It's been a big week, and it's been really interesting to see how the drug companies feel about what is happening in the United States. There's a pricing story. There's also a kind of RFK story that I don't think we still yet fully understand, and the implications of that for the healthcare sector, I think, is still being kind of distilled.
Yes. For reasons that are fully easy to understand, when we were asking various executives in the healthcare space about this yesterday, they were saying, well, we worked well with the last Trump administration, we'll work well with the current Trump administration. So it's not something that the CEOs of these healthcare companies seem to want to get involved with.
Except the person at the top, if he gets through that confirmation process, has obviously very different views, specifically on vaccines, and he was grilled about that, wasn't he? So again, in terms of some of the individual movers that we're seeing across Europe as we kind of factor in what is filtering through, it is, again, technology as a sector. Healthcare is there. Novartis currently up 2%. I'm just looking at other... Balfour Beta, interestingly, here in the UK, up 1.6%. You've got Hexagon gaining 6.8%. On the downside, some of the losses coming through from the retailers here. Sainsbury's is currently down a little under 2%.
Next is up 2%,
one of the movers. Next is gaining. Is that an earnings story or is that an upgrade? An upgrade, OK.
An upgrade, apparently, according to our team. Thank you very much for that information. Joining us now, let's talk about where we are on these markets. Michael Falcon, CIO at Tidan Capital. Michael, good morning to you. So it's been a really busy week. It's a slightly quieter day. And in terms of the evidence of impact of the tariff story, we were looking for that in the auto space, looking for that in the banking sector. It's not jumping out this morning. So do we feel that, well, does the market not think that actually the tariffs are coming, or does the market think it's priced in tariffs on Canada and Mexico and the read across into Europe isn't enormous? So, as we
yesterday it wasn't, and then in the evening it was, and then today I don't know what it is. So it's very hard to price anything in, and then it's going to be up and down. In terms of the auto sector, it's been sucking wind for a long time. You saw GM, Ford didn't look great. The Europeans, they're in a tough spot. The Chinese are coming after them. So there's a lot of things that are negative anyway. So tariffs on top of that. Not a great story.
Yes, but one story that I know has struck you as quite convincing is through the earnings season, we've seen a lot of positive storytelling by executives that you think is sticking in the United States in a way that maybe it doesn't usually.
No.
Is that like animal spirits are back? Are we back to Gordon?
100%.
Back to Gordon Gekko?
People love making money, and money you make when things go up. So you buy every story, and it's the same thing here. The market is pretty much euphoric, apart from Monday. But Monday, despite the S&P being down 1.5, equal weight, it was still up, which tells you a lot. A lot of companies are going up, and you want to buy the hope stories. So, again, the other day you had Burberry reporting. I think the number stinks. But
they're not as bad as expected.
Yes, so. Exactly, it's not as bad as expected. It's only down mid-single digits on full-price items because they sold a bunch of scarves during gifting season. Numbers, again, in March will probably be down high single digits. That's not a great story.
Burberry scarves are really expensive, though.
Yes, and they don't go on discount.
He's checked.
A guy spends a lot of time in Bond Street, so he's got his finger on the pulse of all this stuff.
So he's my gauge here.
Yeah, he's going to be handing out the gifts later. What do you think of it? So the Brett story, you've highlighted that for us. The fact that S&P equal weight has actually held up pretty well this week.
Yeah.
Do you fund a move into that breadth by selling Mag 7?
Well, I got to say the monopolies or the pseudo-monopolies, as the Mag 7s are, is quite safe place to hide.
Still?
Yeah. Well, I'm not a great believer that this is all over and growth is going to be fantastic. Inflation is under control. Rates are under control. Now we're all playing for Goldilocks and we're going for all these value plays. I'm not a buyer of that.
OK. And that is a question mark over the health of the US economy. That is expectations that maybe the Fed doesn't go as far as some would think, that 50 basis points is not what to expect from the Federal Reserve. What is feeding into that slightly more negative view? Yeah,
obviously the US economy is much better than Europe. Europe is a basket case in a lot of places. But the US, obviously they have growth in front of them, but you have a lot of new things coming along that you don't know where it's going to end up. So suddenly you have tariffs, then you don't have tariffs. You want lower rates by Trump, but then you have Powell. You have a lot of different counter initiatives that it's very hard to say where we're leaning towards in terms of growth for the full year.
Other scarves are available. I should just point that out. Europe, I'm looking at the Stoxx 600 every day this week. I think it's gapped higher every day this week. Continues to move higher. It's had a really strong week. We're up by circa 2% this week. I feel like I've seen this movie before.
I agree. Yeah, we're here again.
We're here again, beginning of the year, European stocks going up. Let's go.
Yeah.
This year's going to be different. Is this year going to be different?
I seriously doubt it. But looking at it, I guess over a longer period, the last 10 years, average returns on Eurostoxx 600 and Eurostoxx 50, DAX, we're already there 30 days into the month and the year. That's fantastic. I think that was it.
So this is as good as it gets?
Yeah, it doesn't get much better.
OK, if I want to diversify, though, and I want to think about where I diversify. You talked about the equal weight earlier on. The equal weight had a good Monday, so people do want to diversify.
Yes.
Isn't it cheaper to diversify into Europe rather than the equal weight?
Sure, but you're starting at a P now, forward P 15, 16, depending on what index you're looking at. That's not cheap on a historical basis, so you have to bake in some earnings growth. Last year, if you look at earnings, it was flat. Started the year with great hopes of maybe double-digit earnings for Europe. Again, this year we start with a similar type of hope, but it always comes out as a damp squid.
What kind of regulatory changes are you expecting we'll see for Europe then, Michael? Because I ask this because one of the things that did OK for Europe last year was around decarbonisation, electrification, and it felt like that was the North Star for some investors. Through all of the other macro volatility, there was this structural change that they could bet on and put money behind. Does that look a little shakier now?
Yeah, I was going to say, what deregulation did we get in Europe? I haven't seen any.
No, but to come, I mean, yeah.
Exactly. No, obviously, Europe is great at regulating. That's the one very, very moot point is that, it's the best in the world at regulating when you should probably look at deregulating, and it's really hampering business innovation and business growth. So until I see it actually being implemented, it's hard to be extremely hopeful.
Would you expect it to come, though, on that environmental agenda? Or would it come
possibly.
In other places?
No,
tech, for example.
obviously, environmental agenda is very, very warm at heart in Europe versus a lot of other different countries. But it's hard to see things moving fast in Europe. And funny enough, Monday, Europe outperformed because of lack of innovation.
Yeah.
Yeah. Is that great? I don't know.
Well, when you're in London, you're used to saying, well, the FTSE's outperforming today because it has lots of oil companies and banks and things like that.
Do you want to, on AI, do you want to be buying or investing in companies that are going to benefit from a depreciation in AI pricing? So the buyers of AI products, how they integrate. Do you want to be buying versus the hyperscalers, given what we've seen this week?
Well, it's kind of tough to know who will be the beneficiary. The consumer will be. That's the obvious one. So can I buy the consumer? That's kind of tough, unless you think they're going to have more money to spend because they have to spend less on AI or applications that are going to be developed with AI. But today it's very hard to say who will be the winner from utilizing AI. Obviously, big corporates will have a cost benefit, so trying to find pockets where you can streamline corporate expenses, that's a possibility. But it's so hard today to know exactly how this will pan out, and we're trying to find ideas and opportunities. It's almost easier to see who's going to lose than who's going to win. And just going back, I think it's a great analogy looking what happened during the internet and the dot-com boom. At that time, we had all these companies, spending gazillions of money on things we didn't know how it's going to pan out. And when you look at these companies, Nortel, Lucent, they're all busts.
Is this
huge.
Okay. Is this 1999?
It feels like it. It's of course impossible to see in the future, but it feels very much the same stories playing out again.
And an order of magnitude decline on the back of it, similar to what we saw then?
Well, it depends where valuations end up. Some of these, if you look at the headline valuation on Nvidia, it looks pretty good, in terms of where the growth can be. But what happens the 2 years forward?
You're talking positively about the US, but then the things you're talking about there suggest some kind of overheating situation.
Well, it's a valuation thing, really.
Right, so it's just limited to stock valuations then. You don't think the US economy is in risk of overheating, given the
that is a tough call now, because it depends on how hard will it be on tariffs. How much of domestication do you want to do? What's the reshoring going to be? There's so many different aspects of it, and how quickly will it be done? If it's done in a gradual manner, it can be potentially controlled, but if it's all coming at one time, that's going to be much harder to handle.
So if it's not gradual, and if you do get that kind of big bang on tariffs, where's the safe haven of choice?
Then I think we're going to see inflation. We're going to see rates going up. So I think we see a sell-off in equities. Yeah,
So do equities protect me from inflation? Does the bond market protect me from equities if equities have a problem with inflation?
Well, thus far it has been kind of correlated.
Where do I go?
Well, cash is kind of good.
At the same time. Cash?
Yeah, or being short.
Being short, a lot of people are getting out of being short right now.
Oh, I know. They're getting carried out. I am getting carried out all my shorts, but that's part of the game. You got to have a balanced book and try to be just nimble and move around.
Wait, which shorts have burnt you the most?
Oh, yesterday, about 90% of all companies were up.
Just yesterday? I thought we were going to go further back. OK, just yesterday. Oh.
Yeah, no, it's a lot of these hope stories. So companies with obvious problems where that in 1 year, 2 year, 3 year time, it will be much worse off. They're getting all this great CEO speak of how rosy things will be and how we're going to turn this around. There's plenty of it. Like Burberry, for example, it's up nearly 100% in a few months.
And you're short Burberry?
Yes.
It was a massive move before, and then it's popped quite considerably off the bottom.
I loved it going way down.
Yeah, I'm sure, by the sounds of things, if you were short then. OK, so how do I protect myself? Being short's hard because the market can be kind of irrational, you would argue, for longer than
tells hope stories.
Precisely, the hope stories are there. So how do I protect myself? Where is the protection in the market that you can buy? If it's not the bond market, you can't be short. Equity markets on the... Just walk me through what the diversification trade looks like, other than cash. Is there one?
Well, just in general, in terms of asset allocation, then you need to be involved in pretty much everything. So a little bit of equities, because you don't know how much more is it going up. A bubble takes a long time to print.
There was a story yesterday which I read, I can't remember where I read it, talking about the guys that were in the Big Short book, and they'd come together and they were sitting on a panel, and they were basically saying, we can't be short because they kind of keep getting carried out, to your point, on the short. So therefore, what we're looking for is cheap assets that are unloved by the market.
Yeah.
Is that the trade right now?
Well, to me, what I want to own is single name stories where they have delivered the balance sheet. Management that are responsible, taking care of the balance sheet, come from a tough period, turn around the business, where it's proof they turned it around. Those tend to perform very well over the next several years. So there you can have a few hiccups on the way, but...
Names?
Well, I like Grifols. It was a great short case in the beginning of last year.
Which Credit was here,
Yeah, exactly. Yep. And now I think they sorted out most of the problems. They're reporting end of Feb. I think they're going to surprise on the upside, and there's some pretty good opportunities.
Is there a balance sheet crisis coming then? If the Fed holds? I mean, there's an expectation they hold for longer. Is there a potential, amid small caps, medium caps, is there a balance sheet crisis that we're not waking up to?
Well, there's obviously a big wall of debt maturities coming up. And high yield market has dealt with some of it, but the convert market, particularly in the US, is massive, and they have a huge amount of maturities coming up in 25, 26, and 27. So there's going to be a lot of refinancing happening there. I think there's a lot of opportunities to exploit there.
Great to see you, Michael. Thanks for stopping by to see us.
Yeah, thanks a lot.
Michael Falcon, CIO of Titan Capital. OK, let's take a look at where the core of the European story lies at the moment. The core six looks like this. As you can see, ASML rising nicely, up by 2.41%. The tech sector broadly getting a boost. You can see that in Schneider. Safety trade, Nestlé's kind of not going anywhere in a hurry. Looks like actually Pharma is bid this morning. We bring up Novartis as well, but Novo's also rising. LVMH kind of just drifting sideways, down by 0.2%. What else are we watching this morning? Let's figure it out. Joe Easton, over to you.
We are seeing some decent moves higher in those chip stocks this morning, Guy, particularly given the news that we got out of the US from last night on Intel and Apple. That does seem to be the positive boost for these stocks this morning. ASML leading some of the gains. We've also got ST Micro rising as well. The news out of Asia, of course, was more mixed, with Samsung declining and then SK Hynix catching up from the slump earlier in the week. But it's really the US reports getting the attention in terms of that move there. Then in terms of Novartis, that one was edging higher over in Switzerland. Double-digit sales growth potentially coming for the company despite an impending wall of generic drugs that are coming onto the market, potentially going to hurt their market for the heart drugs is their main thing. There's some concern there on that one, but the sales growth boosting that one. Now, Orsted was actually a little bit higher on news of a new CEO, or at least a change in the CEO, the current CEO stepping down. The stock actually now trimming that and actually turning negative. Remember, they've had a lot of write-downs in the US and a lot of concern around Trump's policies over there on the renewable energy side as well. In terms of a stock moving a lot in London, Smiths Group. Now, this is the company that makes all the scanners that you scan through when you go through airports, checking all your security. Now, they are announcing they're going to spin off their detection business, according to the latest update from them. There was some activist pressure on that very recently, talking about potentially separating that business, and that does look like what they're suggesting they will do now in terms of Smiths Group. A big gain for that one. Then finally, on the ratings changes, next is a safe haven in UK retail, according to UBS, which upgrades it to buy, as you guys were mentioning just a few moments ago. They like that stock, and we're seeing a bit of a boost for that one. It was the best performer on the FTSE 100, up 1.7%. And Carrefour over in France going the other way. A lot of uncertainty around the French market and also Brazil, and that is the reason why HSBC downgrades it to hold. No longer recommends buying. Carrefour slipping in Paris this morning.
Joe, thank you. Joe Easton with an update on those movers. Coming up on the programme at the end of what has been a really big week for tech. We've had the earnings story, we've had the AI race, of course. We'll look at Europe's role in that AI race. Stay with us for that conversation. This is Bloomberg.
I think as we see more and more adoption of AI, there's going to be more and more demand for compute power. It will happen in data centers. The form of it may change a bit, but we still think it's essential, as is the energy and power, which we think will continue to be needed. So we're going to continue to operate in a very disciplined way. We're going to build when we have demand from our tenants.
Blackstone's COO, John Gray, speaking to Shonali Basak there, talking about the continued need and expectation around data centres, the infrastructure of AI and technology. And chip makers in Europe performing quite well in the session, this Friday session so far. ASML is up 2.6%, of course, providing some of that high-tech kit into the foundries. ASM, also based in the Netherlands, currently up 2.7%. And ST Micro, which came out with its results earlier this week, gaining 2.5%. So some upside coming through from the semiconductor makers that, of course, have been whipsawed by the news out of DeepSeek through this week. Now, after profit, of course, as Samsung, the pivotal chip division came in lower than expected. That's for Samsung. Let's get more details from Matt Bloxham from Bloomberg Intelligence. And Matt, this is still a story of catch-up then for Samsung.
Yeah, it is. And I guess one of the big pieces of news was that we're increasing their R&D investment, or maintaining it at a high level to try to close this gap on their big rival, SK Hynix. And the kind of big focus is high bandwidth memory, which is what's needed to power the NVIDIA chips. And SK Hynix has had an approval for quite some time about a specific type of chip or that you need to support the China-oriented technology that NVIDIA sells. And it's taken a long time for Samsung to kind of get this approval from NVIDIA too. They've got that now, but obviously things don't stand still, and there's a next generation of high bandwidth memory chips coming along, and it looks like SK Hynix has still got the edge on that. But there's going to be a big tussle between the two of them about who can get the nod from NVIDIA first, because that will kind of create a bit of a first move advantage. So I think that's the main reason that they're stepping up their R&D to see if they can kind of leapfrog SK Hynix.
This time last year, Intel was trading in the 40s. It's now trading at 20.
Mm-hmm.
Were the numbers that we've just seen a sign of stabilisation?
I don't think so. What we saw, obviously better than expected results in the quarter they've just done, but there's expected to be a corresponding dip in the quarter coming because essentially clients were increasing their inventories ahead of the fear that sanctions or tariffs might impact them going forward. So, it's not really a sign of things getting better. It's just a kind of timing issue. And obviously there's still a huge amount of issues for that company to work through in terms of getting a new CEO, whether this company stays together, whether they can make their foundry business work. And, the only client they've got for their foundry business is themselves at the moment. And I think probably what investors are holding on to is if the kind of America First initiative really gains traction, that more companies will have to build this stuff in the US. Right. And that's where Intel's strength will maybe start to come into play.
Matt, let's recap the latest on DeepSeek, because this has been really whipsawing markets, or certainly did on Monday, Tuesday. We now have news of a US investigation into DeepSeek, which seems to be around the types of chips that are actually being used here. Previously, we'd also heard suspicions stateside that maybe DeepSeek relies on OpenAI and other Western large language models. So what threads of investigation and probing of DeepSeek are currently underway?
Yeah, so I think, as far as we know, they're the main ones, that you have this kind of Microsoft OpenAI-led probe about whether they stole trade secrets to kind of help develop the DeepSeek model. And now we've got this investigation about whether it was using advanced chips that you shouldn't have been able to get access to because there's sanctions on China. Now, DeepSeek have said that they use the H800 chips, which is the China-approved NVIDIA chip. But there's been a lot of speculation for some time that China's getting access to the most advanced chips. And Singapore, which is the focus of the story, accounts for about 20% of NVIDIA's sales, which seems kind of very outsized. I think there's been a lot of speculation for a while that who are the end clients for these kind of Singapore shipments, and how is this a kind of backdoor into the China market? And there have been stories about data centres being built in third countries, and once they're finished, just being dismantled and shipped into China. So, no sanctions regime is kind of flawless. We know that, and I think this is the way that China's trying to evade those. So I think, we talked about this earlier, but one of the question marks for me would be with NVIDIA is, are they squeaky clean on this? Did they do everything that they could to understand their customers? And we saw a few years ago that Ericsson got into all sorts of trouble about bribery and corruption in places like Iraq, and they're still paying the price for that. It's still under investigation. They have to pay a lot of fines. So I think there might be a little bit of scrutiny on NVIDIA to see whether they acted appropriately at every stage.
Would increased restrictions on things like the H20 chip that the Trump administration is potentially considering, would that actually have a material impact on China? And what alternatives could they look for in China?
It kind of feels like now maybe, the kind of the barn door is open. China's great at understanding, or historically has been really good at understanding Western technology and copying it. And if they do have access to the most advanced chips, and we've seen with DeepSeek whether they built it from scratch themselves or they copied other people's models, they can do it really well and come up with something even better. And we've seen that in the mobile equipment market too, with the 5G infrastructure. So I think they understand what they're doing now. Probably they have enough information that they can kind of go forward themselves. Probably the bigger issue for them is whether they have the kind of the fab plants to make their own silicon, and that might be still an area where they might have a bit of a time gap to kind of catch up.
Taiwan has some of those.
Yeah, exactly.
Which leads us to geopolitics. Okay.
Yes, takes us into other territory.
Matt, great stuff. Thank you very much indeed. Technology leading European equity markets this morning, up by 1.34%. Up next, we're going to talk about what is happening in Germany. Big vote today in the Bundestag. That's next. This is Bloomberg.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. Number one is the people that have poured into our country so horribly and so much. Number two are the drugs, fentanyl, and everything else that have come into the country. And number three are the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
President Trump reiterating his plans to impose tariffs on goods from Canada and Mexico coming in tomorrow. The Canadian dollar, the Mexican peso, both taking a hit ahead of that deadline. Kevin Whitelaw, Bloomberg's Brussels bureau chief, joining us now to discuss all of this. Kevin, that's the broad brush. We're going to get tariffs. That seems to be now the base case. The question is, what are they on? What are the details? Is it going to include oil, particularly from Canada? What is the legislation, the emergency potential legislation that they're going to use to back this up? How stable is that? Are there details that are still going to be critical to the impact that these tariffs are going to have?
I mean, absolutely. Trump has given himself a deadline of tomorrow to make this announcement and to unveil these tariffs on Canada and Mexico. We still really don't have any clue what this means. He's talked about them as if they're going to be broad brush, but he has also suggested he hasn't decided whether they'll include oil, which in the case of Canada would be a very, very significant element. So, ultimately, we're just going to have to wait, like we've been doing all along, to see what he ends up doing. He's got sort of two warring ideas in his head on these tariffs. And one is he wants to use it as a negotiating tactic, which is to say, what kinds of concessions can he get in the drug war and immigration from these countries? But another is to still sort of fundamentally reshape the way American manufacturing works and try to deter companies from basing factories in Mexico or in Canada. He wants them in the U.S. Those aims are not exactly the same. They're a little contradictory even at times. And so he's going to I think everyone is still trying to figure out which is the real aim here and what's he really trying to accomplish.
Yes, indeed, because then you might have an idea of how Canada and Mexico can implement policies, make changes that might push back these tariffs or reduce these tariffs. So the president was talking about fentanyl, he was talking about migration, and both of those countries say they've done things on those fronts. But then, of course, even if they do tackle those, you come back to the trade deficits, and that's something that Trump has clearly prioritised. So you kind of wonder if there's anything that these countries can do to stop these tariffs being imposed.
Well, that's exactly right. And obviously, we do know Trump is sees himself as a negotiator and someone who wants to make deals. But some of these aims aren't really about deals. Some of the things he's trying to accomplish are a lot more structural and a lot more medium term. So, as much as countries are going to be tempted to try to make deals with him, there's also the risk they make a deal and then he keeps pressing because, if he senses weakness, he may just keep going. And so I do think that both Canada and Mexico are going to have some complicated decisions ahead of them as to whether they, do try to see if they can find ways to appease him or whether they want to hit back hard and really inflict pain and get into a more punishing trade war that has the risk of economic damage on both sides.
Yeah, I mean, they made concessions last time round, didn't they, with the rewiring of NAFTA, and now they're facing his wrath again. What should we expect around China and the threat? How real is the threat of tariffs from China? Or is he's been talking a little bit more softly about tariffs on China versus Mexico and Canada?
Yeah, and I think that has a lot of people thinking that the Canada-Mexico ones are maybe a little bit more about a negotiating tactic, the way he did with Colombia, where he sort of threatened a high number and then, sort of quickly cut a deal of sorts. I do think with China, he has been China's been a problem as far as he's concerned for a long time when it comes to trade. I do think that he is serious when he intends to try to do something. But like everything, I don't think his administration has really decided how hard, what kind of timing, and how to approach it yet. And so, you can sort of see the Chinese just sort of waiting. It's the same thing here in Europe. Everyone in Europe is just kind of waiting to see where they're going to go. You're seeing a lot of people on both sides try to make the case about what the value of the current trade is and what the risk is if they go into something that's a real tit-for-tat kind of confrontation.
Kevin, you talk to a lot of people in Brussels. What is the expected response? What's the current thinking? What are people telling you right now about what Europe will do if it gets hit?
Well, if it gets hit, I mean, they have prepared a list of retaliatory steps, and it can sort of be scaled up or down based on, what it is that Trump actually does. So we don't have the details of that list yet, but we do know that the basic idea would be to, inflict some real economic and perhaps market pain. The idea is if Trump measures some of his own success by the value of the stock market, what do you do to hit the stock market? So, we'll have to see in the end whether that ends up ever happening. Obviously, Europe hopes it doesn't. They're trying to avoid it. And right now, all they're trying to do is not say anything that may provoke him.
Right. And we know from Canada's perspective, they've already said that they will retaliate against coffee and bourbon. And I know we've seen lists in Europe, Kevin, that try to push at sort of parts of American culture, I suppose, as well as having an impact economically, or maybe even not having so much impact economically, but having a lot of name recognition.
Yeah, there's a little bit of symbolic. That's, when during Trump's first term and the US and the EU got into a tariff fight, the EU hit bourbon and it hit Harley-Davidson. It hit those kind of targets. It really did a lot of damage, particularly to Harley-Davidson. So, there is some interest on his part in hitting some of, in the EU's part in hitting some of the symbolic targets. But I do think this time, as they prepare these lists, they're actually focused a bit more on how do they actually inflict some economic pain so that hopefully, Trump thinks twice and steps back from a full confrontation. But as I say, we really don't have the details this time because the EU doesn't want to look like it's courting or this fight. It doesn't want this fight. And instead, it's trying to remind the president that you can't just measure trade when it comes to the actual physical goods crossing the ocean, but also look at digital services where the U.S. has quite a surplus with the EU.
OK, excellent context on the tariff threat. Kevin Whitelaw, thank you very much. Indeed, to Germany now, where the German parliament is set to vote on a hardline immigration bill, which has caused a stir, not just because of its tougher stance, but because Friedrich Merz, the favourite to become the next German Chancellor, is relying on support from the far right to get it through. He's faced a fierce backlash, including accusations that he's breached a firewall aimed at keeping the far-right AfD from power. Bloomberg's Oliver Crook joins us from Berlin. Ollie, explain this controversy.
Yeah, so listen, Tom, I think we should start by beginning to say that this is basically, I think, the most consequential event so far in this campaign, in this election, German election, and that could really, really change things dramatically going into this vote that is going to be held in about 1 hour's time in the Bundestag to basically put forward by the CDU in order to have a much sort of harder line on immigration. The reason, as you mentioned there, Tom, that it is significant is not necessarily because of the content of the law. It is because it would be for the very first time since the Second World War that you have a mainstream party, you have the CDU voting in the same direction together with the AfD. If you look at the actual content of the law, and that's what's actually sort of interesting about this, in a moment where you have immigration as one of the top priorities in Germany, top priority across Europe, top priority in the United States, it's not really a radical law. It's calling for sort of permanent border checks on some of the German border, accelerated deportations for illegal immigrants, as well as sort of heightened security measures, and to empower a number of security forces in order to execute those aims. But of course, in the context of Germany, there's a cordon sanitaire in France, and there are these policies across all of Europe. But for Germany, it's obviously very, very different, and it strikes very, very close to home for a number of people in Germany, because that is, of course, how the sort of rise of fascism began in Germany, with little concessions on the way forward until a full takeover of the government, which is why you have seen thousands of people take to the streets in a number of cities over the last couple of days.
Merz knows that this is unlikely to go through. As Anna was pointing out earlier, the Bundesrat's likely to vote it down, the upper house. What's the objective for him here? What is he trying to achieve? What message is he trying to deliver about his policies going forward?
And so, listen, this is really what's very interesting about whether or not this is something that's going to pay off for Friedrich Merz. I think everyone has a different opinion on this. And if I'm honest with you, I have no idea how this is going to play. I will be very interested to see what the polls will show on Monday. I mean, he has said it himself in his own words. He was talking about this yesterday, that he wants to ensure that the policies that the CDU have are corrected to such an extent that a party like the Alternative for Deutschland is no longer needed in the country. That is what he's explicitly trying to do. He's trying to tack to the right in order to undermine the support support for the AfD. The problem, of course, with that is that it could also massively backfire. Though there may be some support for him to doing this, this could also make him lose a number of the centrists that there are in the CDU. And there has been massive pushback, not just from other parties in the politics, which you would expect from. You have Angela Merkel, who has come out, who said that this is a bad idea. You have two of the major churches within Germany who have come out against this. This is the Christian Democratic Union. This is obviously sort of substantial. So this could really go in either direction, I think, going into this weekend. And it also doesn't help that the SPD and the Greens basically were unwilling to negotiate or get behind this legislation. And I want to pull that poll that we're looking at right now. This is a poll from 2 days ago where you're seeing for basically the first time a 6-point spread for the #1 spot in Germany between the CDU and the AfD. I think it's a very, very long shot for the AfD to take over and be the first party in Germany. That being said, ahead of the election in 2021, the SPD closed about a 12-point gap with the CDU. And I think going into this weekend with this sort of bomb going off in the middle of sort of German politics, the outcome will be very interesting to see. I really don't know which way it's going to shake out, honestly.
Well, we'll certainly watch that 6 percentage point spread then, Ollie, between the CDU and the AfD, and we'll see if that moves into next week. Let's talk about the economic backdrop to all of this, because we know about the weakness in the German economic story right now, and we've actually got some weaker inflation data out of France a moment ago, half an hour ago or so, that actually weighed on pushed up our expectations of how many cuts we're going to get from the ECB. What are we expecting to get from Germany?
Yeah, you're expecting to get kind of the opposite story from Germany. So if the French figure came in at 1.8%, what we're expecting in Germany for the month of January in terms of headline inflation is 2.8%, right? And that is the same figure that we had from last month, and that is an increase from what we had in the month before that. So what we're seeing is slightly this trend going up in terms of inflation. If you look at the forecast of what we're seeing from the Bundesbank, what they're expecting inflation to come down in Germany through the rest of this year. They're expecting it to average 2.4%, and then in the year 2026 going down to basically 2%, 2.1% to the ECB target. But let's not lose sight of the fact of the main sort of data point that we got this week out of the German economy, which was GDP for the fourth quarter. It was already expected to contract by 0.1%. It came in even worse, came in at 0.2%, another contraction for Germany. That means another year of contraction for Germany. And it's all coming, Anna, now when we're talking about not just the sort of bad numbers on the paper, we're talking about job cuts across German industry. We had IFO coming out yesterday saying that basically in a survey they just did that every single branch of industry in Germany is looking to reduce headcount. If you go sort of add that economic picture with potentially what could be a very fractious political situation, a coalition that maybe, once again, can't get a lot done, it's a pretty grim reading for the German economy.
It's going to be fascinating to watch, as you say, the impact unknown at this point. Ollie Crook, thank you very much indeed for talking us through the politics and the economics of what we're about to watch happen in Germany. Coming up, how much should bank bonuses be really worth? And is there a big difference between US and European banks? It's the subject of today's Big Take. We're going to discuss it next. You want to pay attention to this one. This is Bloomberg.
Welcome back to the opening trade. Happy Friday. We are 46 minutes into today's session. European stocks currently up on the SOX 600 by 0.3%, building on the record highs of yesterday. Here in the UK, the FTSE 100 trading at 8,676, up 29 points. Decent gains over in France as well, with the CAC 40 up 0.4%. Tech and healthcare amongst the sectors leading the gains in the session today.
OK, so that's today's session. Let's go back to the private equity agenda. The EPEM conference is winding down in Cannes. Dealmakers got back on their feet in 2024 and are now waiting to see how a second Donald Trump presidency will impact investments. Eurazeo's co-CEO, that's William Kadouch-Chassaing, thinks the coming period will have opportunities for the continent. Bloomberg's Kriti Gupta spoke to him at the conference about what Europe needs to do to attract more capital.
Number one, Europe needs to have a shock of investment. I mean, there is a lack of, and there has been a lack of investment in venture and growth equity for years relative to the US, and it translates into the productivity gap that is a lot talked about. The second point that we need to tackle is we need to move forward in integrating our capital markets and move forward in creating pension funds that would help channel the savings in Europe towards the real economy. And the third is also well known. It's about simplification. We are over-regulated, so maybe not regulated enough, but it's clear that we are over-regulated. I'd like to add another point, which is a mindset. We need to change our mindset. We need to be a bit more optimistic about our future and leap forward, because there are great entrepreneurs to back on this continent.
Quite a laundry list there. I'll add maybe one more that I think a lot of people are talking about, which is perhaps the instability from the core of Europe at the moment, from France, from Germany. Is that perhaps sending the wrong message to international investors who, to your point, are maybe looking at the States and saying that deregulation agenda is coming way faster than in Europe?
Interesting you say that, because on the one hand it's true, there is some instability on in key countries, France, Germany, you named it. And that, of course, is a limitation to setting an ambitious agenda of reform of Europe, to the point I made earlier. But when you talk to international investors, yesterday I was with a Japanese investor, for example, they said, we are starting to reallocate a bit away from the US to Europe, and the reason being that somewhat under the current administration, we think America has become a little less reliable and predictable. So, everyone has his own opinion as to what political stability is. The truth is that, of course, the deregulation agenda is moving fast in the US, and it will take long in Europe, also for good reasons. We don't want to unwind all the policies we have, whether this is in diversity or whether this is in climate.
That was the Eurazeo co-CEO speaking there with Kriti, of course, at the EPEM Private Capital Conference in Cannes, in front of all those yachts, Guy.
In nice weather. OK. These are important things that take us to our next conversation, yachts to bonuses. It feels like an obvious transition. How much Wall Street bank bonuses, how much are they really worth? It's a big topic, and it's the topic of today's Big Take here at Bloomberg, looking at the divergence between the US and European bank bonuses, and between banks, to be honest. It really depends how your bank stock performs, because that obviously is going to have a big impact back into some of the stock bonuses that are being given at the moment. Jenny Serrain joins us now on set to talk us through this story. This is really good analysis, and there's a really fun little calculator on the story as well, which is kind of great to take a look at. Just walk us through the divergence that you can see. If I'm given $100 as a bonus, the kind of variability that I could potentially see further down the road, depending on how stocks perform.
No, I think that's exactly right. So especially as we're in the midst of bonus season right now for a lot of these bankers and traders, the number that they're often given at this time of year is not exactly the number that they end up walking away with. A lot of these bankers are getting a big portion of their bonuses in restricted stock units. And so once those finally vest over the course of about 3 years on average, we've found that there's a really big divergence between especially U.S. banks and European banks in terms of who exactly kind of walks away with what they were promised and who walks away with a little bit less. So we saw that on average, the U.S. banks, and it's exactly right, mostly based on the fact that their stocks have been so much stronger, especially post-crisis, bankers at those banks were kind of walking away with more than what they were promised in their annual bonus letters. And over at the European banks, on average, a lot of the times they were walking away with less.
Because of the performance of the stock. And there's that divergence then between Europe and the US. So what are European banks doing to kind of mitigate that? Because this is all about retaining talent.
Yeah, no, I think it's a really good point. There's not much other than the kind of ongoing work that all these CEOs and executives are doing to restructure the bank and put it on better footing, appeal more to investors. There's not much they can do. So I think that's like why you hear so much from them about wanting to tell this story to investors, wanting to get this right, because it really is all this big feedback loop where the stock performance really matters. A good banker, a good trader, they usually know the bank stock price within a couple of pennies or a couple of pence. Yeah. So they are obsessed with this, and it really gets back to this is what they're paid in, and this is why this matters so much to them.
OK, so what does this mean then in terms of the bonus season we're in right now, compensation, statements arriving for people, and how much fun can you have with the bonus calculator on the Bloomberg terminal?
The calculator is really fun. I highly recommend everyone go and give it a try.
This is a very well-read story on the Bloomberg terminal, I should point out, that will surprise nobody.
Yes, yeah, no, it's really fun. You can go in, you can, take a look at your bonus, take a look at how it might compare to someone down the street. But I think, right now, a lot of folks are really expecting bank stocks to take off in the next couple of years. A lot of that's driven by President Donald Trump over in the U.S. They think he's going to usher in this new new era of deal making and greatness for banks. And so if you've gotten a big bonus recently, you're probably feeling pretty good. But as we note in the story, fortunes can change very quickly. We might all remember back in 2023, Credit Suisse was planning on giving out some really big stock-based bonuses. One month later, they were no longer in existence. So fortunes can change very quickly on Wall Street, and the story today is really trying to capture that.
Jenny, thank you very much. Bloomberg's Jenny Serrain with the latest on that big take story. Let's get back to some of the stock movers this morning, Guy, in a market that is broadly slightly higher.
Broadly slightly higher. Novartis is not broadly slightly higher. It is up by circa 3%, just a little bit more than that right now. The Swiss company coming out with numbers a little bit earlier on. It does have an issue with generics. It's basically got an issue with copycats coming through, but it basically is saying this morning that it does see profits rising despite all of that. It feels like its pipeline is going to deliver this year, and as a result of which, the company now expects its core operating profit to grow by high single digits to low double-digit percentage gains. Basically, that is going to outpace the sales story. So a really positive story. Also saying that the CEO basically indicating that he thinks the Trump administration health concerns, the issues around it that it could pose to the healthcare sector, slightly overblown. So I think that's an interesting
The concerns around JFK, his views on vaccines.
RFK.
RFK, not JFK. RFK, good point. His views on vaccines and the pharma industry more broadly. Barclays came out with a note on the back of these earnings saying this was really, really solid because the expectation, to your point, had been that they would take a hit from these generics. On the chip sector, you're seeing gains for technology as a sector in Europe again today on a massive week for tech. ASML over the Netherlands up 2%. ASM also in the Netherlands, up around the same amount, 2.4% in fact. ST Micro over in France, gaining just shy of 2% as well. So the lift coming through from the chip makers and the equipment makers that go into the supply chains, you can put down probably to a better than expected picture coming through from Apple.
Yeah, let's go to another stock on the move this morning in London, and this is Next. And this is often seen as a bellwether of UK retail. It's getting an upgrade today from UBS, and this is because they think that this stock and perhaps the sector, maybe even the economy, is at an inflection point. They say they've taken the fashion retailer to buy from neutral, and they say it's an inflection point, but this is not necessarily because of a good consumer story. They say that it acts as a safe haven in an uncertain consumer landscape, and so as a result, giving it an upgrade.
OK, next on the upside today. Here's what else to be thinking about then through this weekend, or before we get to the weekend today. 9 a.m. UK time, ECB inflation expectations. This as we report on potential changes to the language around the ECB statement going forward. 1 p.m. UK time, it's CPI inflation out of Germany. 1:30 p.m. it's the big one in terms of PCE stateside. To what extent will markets readjust around that? Expected to come in around 2.6%. 1:30 p.m. the Fed's Michelle Bowman will be talking. We're also getting central bank speak from the ECB's Villeroy. That's at 2:30 p.m. UK time. And later on the earnings front, Chevron and Exxon in terms of the energy majors.
Six Nations kicks off tonight as well. Fantastic weekend of sport coming up. Really can't wait. So it's France versus Wales tonight. France are the favourites. Wales definitely are not the favourites. It could be a tough day, tough night.
France are the favourites of the competition, aren't they?
Yeah. So, precisely in the whole thing. England, Ireland tomorrow. Michael O'Leary telling me earlier on this week he thinks that the Irish potentially could lose today. That's his that's the chat coming out of Dublin.
Yes.
So it's a home game in Dublin.
Wide-ranging conversation.
It was a wide-ranging conversation on a load of other things as well. It's Pebble Beach as well. Rory hit a hole-in-one yesterday. I think it was on the 15th.
We can't play the tape, can we?
No, we can't. Fantastic hole-in-one yesterday.
Well done,
Rory McIlroy. So that's going to be worth watching.
That's all the sport.
Lunar New Year, Chinese New Year.
Yep.
What zodiac sign are you? Do you know?
No idea.
Year of the Snake.
Probably a rat.
You're Tiger. OK, year of the Snake, mysterious, passionate, wise, enthusiastic and sensitive. Trying to find Year of the Tiger around here.
Keep scrolling.
Keep scrolling.
That is it for the opening trade. This is Bloomberg.